everybody, welcome. Thanks for joining us today on a review for Maxi. We're going to take a look at the market conditions today. We're going to see what we've been missing on the last couple weeks where we hadn't posted new videos, and we're going to look at the future like we always do here. So let's dive right into it. I see you already have pulled up the chart. This was some of the exciting trading that we got into this last week, and you already put it up, CVNA. At this point, I feel like you probably have heard of this short squeeze in action. I think at this point, Wall Street Bets has caught on. Quite a few like retail investor channels are starting to like chatter about this one. But looking right at this chart straight off the bat, I gotta say that Maxi Buddy bull print, that is, what is that, like 500% spot trade profit?
I think we have. Let's see. We have. Let's see. I'd saved this.
Let's go.
Earlier, but 527%.
That's spot. That's if you bought. That's if you bought spot.
Going.
Yeah.
And that's still going.
Yeah.
What
a run.
I mean, I don't know if it's a short squeeze or. From a chart perspective, though, it looks really bullish. Like even if you switch the weekly, and this is the weekly chart, you can see how like 2021 it flipped bear, and then it's just been in a downtrend. And then see, we got a bull print on the weekly too, and then you can see like we have like a rounded bottom here. This is like really bullish,
extremely bullish. And look, like that print came well before any of the current chatter that people are aware. Like people are aware of this squeeze right now, but like this was what, like
this was in like early May, beginning of May, basically.
Yeah. So I'm gonna pull up at this part. Like look at these. Here's a few like Wall Street Bet posts that were posted around early May, and these people are either completely bear still, or like in this one here, they are calling a potential for a squeeze and nobody's listening. So
but we were very well positioned. We've been writing this, so we've been doing really great along with like the other, all our members. Like we shared this chart with our members.
Yeah, that's a big part of it, because like the Trading Buddy and the indications that it's been making on these charts is great on its own, but on its own it's not super valuable like it is in conjunction with the Discord chat. So Maxi members who are participating in our Discord chat they don't just have access to the Trading Buddy, but then in that chat we're like, hey, these are shares that we're keeping our eye on currently, and so this CVNA ticker,
Carvana,
we were pointing this out. We're like, hey, this print is here, add this to your watch list, keep tabs on this. And and then once we started seeing this squeeze kind of forming, this kind of momentum building, we then in the Discord, aside from being like, look at this ticker, we were like, we are buying shares at this price right now, setting stops at these levels. And so we had quite a few members joining us on trades on these assets that were very, very happy with the returns from those trades, but also had said that they would not have necessarily been paying attention to this ticker or jumped into a trade without that side of it. So I just wanted to illustrate, I love showing off the Trading Buddy and showing off the indications that it makes, but absolutely is good value for the members who are participating in the chat and are are able to see that. And a big part of that chat that I really like, and that I've had a few people reach out to me saying that they really like, is at the end of every trading day, about 20 minutes or so before market close, before standard market close hours, Sid usually is posting a screenshot of all of the shares that he will be holding through the close market into the next day. And that's that's something that really helps people kind of like gauge what they maybe want to do, or if they want to follow along. It's a nice like real time thing that's going on, where when we're making trades like this, we're posting about them in that chat in real time as well.
Yeah, we kind of like post a list, and also we also post the reason, because we look at the buddy, and then we also like look at how to teach people trading, technical analysis, so which is also important.
And it's really like it's catching on. I gotta say, like seeing a few people in the chat where they'll be like, hey, I'm looking at this ticker and here's the ranges that I've drawn out. They're getting really good at it. I love it.
Yeah. I see a lot of improvement where
Yeah.
they're getting more precise.
Yeah.
And that's something like, it's just practice, you know?
Yeah.
But definitely it's like, that's something you just have to keep practicing. But all the only thing I really use for trading is like basically our indicator, and then like technical analysis. That's all there is to it.
Exactly.
You know?
Yeah.
And then last week has been, you know, ever since like this bull print, we've been like playing some of the other stocks too. It's been pretty good.
Absolutely. So we're still into next week looking for a continuation of this trend. Like you said, the rounded bottom, very bullish. And obviously, like a few members of people in general out there are pretty aggressive when they want to play these kinds of motions. So people will get into like options positions or future trading and stuff like that. So there is a decent amount of risk involved when you start using leverage or start setting strict end dates for your position to play out, like with an option contract that has a strike date, and after that date it no longer is valid. So that's always fun to be able to help people understand how to navigate this. But like you showed that first chart, 527% on spot trading. That means just buying shares and holding.
This is not crypto, this is not Bitcoin, this is just
you're not
stock.
you don't get liquidated here. This isn't some kind of leverage that you have to maintain your margin. This would be, you put, $10 into the share when we got the buy print, you could have pulled out $520 out, like it's nuts.
It's crazy.
600 something actually, because 100 would already be double. So,
and I think we're just getting started. So like, I think we have a lot more to go, and it'll be interesting to see when we actually have the top and we get, basically the plan is to ride the trend. We have a bull print. All we have to do is just wait for it to flip bear. Just like here, we can see like earlier on, you see, and then you get a bear print and a red band together. That just means that it's most likely topped out. Yeah,
once we see that bear print on the daily, I think we are going to start like preaching about maybe taking profits. This has been quite a run, and it's important to not get greedy with this stuff, because I will admit it's difficult. It's difficult to sell something that just has made you 500%. And having that discipline is extremely difficult when you're doing it by yourself. So that's another big like boost in the Discord. I love seeing when like, hey, I see someone like, I'm taking profit here, I'm seeing this trend change, and then it's like, okay, I will join on this. It's like, hey, it gives me like that pause in my mind where it's like, hey, okay, people are taking profit, like maybe I should reassess, like, hey, I have made 500%. Maybe I take my principal off the table, there's no reason to ride this all the way up and all the way down again,
Yeah, exactly. I think like that's the thing, like risk management is also, and then just being disciplined. I think that's really important.
I've personally learned quite a few like risk management moves from a few of our members too, which is great. It's like
which is awesome.
Yeah, I've definitely gotten more active in like hedging positions or being much more comfortable with cutting a position that I've recently taken if the direction changes, and like just being like, okay, it didn't play out the way I had thought. Let's not wait. Let's like cut. It's okay to take a 0.5% or 1% like loss, or even just to close out a wash, versus trying to like the hoping and waiting isn't a strategy.
Yeah, I think like bag holding just for the sake of bag holding, like that's terrible, like it's important to, as a trader, like it's important to see if things are going south, like it's turned, the trend is flipped, and then it's the right thing to do is like take a small loss. It's totally fine, as opposed to like holding it and then losing everything.
Plus it gives you get the capital runway again to take a new position, and then you try again, versus being like, oh, I made this position, I'm sticking with it. The whole concept, there's definitely, I've heard quite a few people in the past say things like, you haven't made any losses until you realize the loss, until you've sold. The idea of like, sure, I'm down, but it's not a loss until I sell. That's nonsense. That's a really bad mindset. And so it's nice
because
to be.
At some point you'll panic sell, and you don't want to do that.
Exactly.
That's just like psychology.
And you get into a position with like, again, buying and holding isn't a strategy. So when we open new positions, there is part of the position is like, for example, this one, it's like, okay, we're opening this, we see it's running up, like Sid and I are saying, there's definitely room to run higher. But if we start to see it like not continue to run, then we also have, as part of the strategy, a like exit point where it's like there's it's an exit strategy, like it's not like, oh, I'm gonna like hope and like someday maybe this will run to 100, 125, and honestly it might squeeze really, really aggressively, but
taking profits is a smart thing to do.
Taking profit is a strategy.
Just keep shaving off some, and then that's
even
if
it's just principle too. And like, for example, I have, especially like with plays like this that are this is like a kind of a short squeeze going on, but also like we were looking at the wider timeline, this is a very bullish, into like a very rounded bottom. The chart looks, it has
the weekly, if you look at it,
plenty of juice left in this one. But part of like my strategy, especially when trading volatile assets, so not quite as relevant to like stock trading, but like especially in crypto markets, I have like certain rules that I follow no matter what the conditions are. And one of those rules is something like along the lines of, okay, take back principal when I've made a 200% profit. So if I put in $100, we're at $300 now. Okay, I'll take back 100. And then the way that I see that now, like before I was like, oh, I'm missing out on, maximizing my gains. Well, there's a better way to think about it, in my opinion now, is like I am taking my principal back and I am keeping double my principal exposed to the upside still. So I still have twice what I started with exposed to the potential upside, but I now have no more downside. It's house money, if you will. And that's a strategy, because that's a rule, and I don't care how like amazing the chart is looking and like how potentially it could make me much, much more. What I'm going to do is stick to the plan. And the reason I do that is because I'm an investor, and an investor has a strategy and is following the strategy. I'm not reacting to market conditions and trying
investor or a trader, like we need to follow rules and have discipline. And that's a really smart way of doing it.
Yeah. And then I love the community side of it too. Like in the chat, I like, people will hold each other to it, which that helps too. Because like I said, when you buy into, it can be very real. Because you buy into this asset and then like suddenly you have a money printer and it's printing, it's printing money. It's hard to sell a money printer, So it's definitely nice to have that community aspect where you're not just sitting in the void kind of doing this on your own. And on that same note of like not just sitting and holding shares, there is big real world news and market conditions coming down the line here that generally is part of our strategy. We don't like to hold onto shares during like next week. We'll have the FOMC meeting where the Federal Reserve will announce their federal interest rate increase or decrease, or whatever they will be doing with the interest rate. And during this week, the market I think right now is expecting a 0.25% increase in federal rate interest levels, which could suggest that a 0.25% increase is already priced in, but that's very speculation, very speculative, and therefore a big part of our trading strategy has always been to close positions before FOMC, wait for the actual FOMC information to come clear, make us a clearer picture, and then reassess and enter new positions. So
we've been doing that because or if you're at least like have small positions while FOMC, because like you're going to expect a lot of volatility. There's going to be scam bumps and dumps. Like you're not going to get a clear direction until the day off, or even the next day. Like sometimes you could get strange moves until the market actually picks a direction. Like maybe a day later or 2 days later.
Yeah, and
So
those volatile market conditions can be very devastating if you're maintaining a margin position, or if you have like liquidation levels that, you know, generally would work totally fine, but now we get like a big spike or a big dip, or that, you know, is a short-term thing during this like lower market activity week, while the market is kind of waiting to see if what it had priced in was correct or not. So in general, like our stance is it's a better idea to, you know, not participate with derivatives during an FOMC week, and also to kind of scale out of open positions.
Yeah, risk off during the week.
Yeah,
and
manage it.
And like you said, like it looks like, I mean, the market could have priced in the 0.25%, but I mean, looking at the chart, like I was looking at the DXY, or the dollar, and it seems to be, this is the weekly chart on the DXY, and it seems to be
for people unfamiliar with the DXY, this is the chart that tracks basically the strength of the US dollar. And it is a general trend that we've observed that as the US dollar gains strength, equities tend to lose value, because
and crypto too. So both.
Yeah. Oh yeah. I usually lump equities, crypto into equities. I feel like we'll talk about why at the end of this, actually, because there's some development that kind of affirms my you know, terminology there.
Because like the market, I mean, it's kind of logical. I mean, the markets are basically like risk off.
Yeah.
You know, if there's more value to the dollar. You know, you're just getting more returns for your dollar than like anything else.
And the majority of the money in these markets isn't retail money, like people who are, you know, trying to like make money with some trades on the side or something. The majority of this money is hedge funds, is major institution money, and the strategy on those positions is wildly different than a retail investor strategy. When somebody is managing billions of dollars, the goal is to maintain wealth, not to, you know, exponentially grow the position. And so if it looks like the dollar is a good spot to maintain a wealth, then they will shift from equity, like from stock shares, into these dollars, until it looks like the dollars are going to be a less safe like haven for your cash. And then equities start to pump again really nicely.
Exactly. And you can see an example, like if you see like, you know, 2021 to 2022, like basically last year, we saw the whole, you know, stocks and crypto, like basically be in a bear market, in a downtrend. And you can see actually the DXY had a huge run up. Huge. You can see like a bull print, we've got the bottom again. And then see, it looks like it topped out like somewhere this year. And then now it's just been chopping. And now
you have a channel drawn there.
Sort of like channel. And this seems to be kind of like a tweezer bottom.
Tweezer bottom.
Like it went
bullish close there on the last week's candle.
Yeah, because like, you know, both the wicks are like around the same height, and also like it's the bottom of the channel, and then it looks to be bouncing. So so putting a few things together, right? Like the fact that we have FOMC coming up, and then the DXY, the dollar seems to be potentially bottoming out. So both those things, you know, if the dollar basically pumps, then we're most likely going to see like stocks and crypto pull back. And I mean, if we take a look at the S&P 500 chart, or the QQQ, you can see like, for example, the QQQ, like that's not that's kind of
it's a little bit bearish. Yeah, and also it does
right on resistance.
Yeah, that's going to say right on resistance, and it does look like the RSI there, your metric below the chart, has been on the overbought side for quite a while.
Yeah, and then now it's like flipping / like trending down. So also like this was its last high, and it's the same for like the S&P 500, like the SPY and the QQQ, and both of these, like it's basically gonna like it'll take some effort to like break through this resistance.
Absolutely.
You know, onto like new highs. So like it does seem kind of natural to like to have a sort of like pullback or
Yeah.
some choppiness. Like we could just like sort of like, like let's say like it pulls back and then like we we range here before we like take off,
Yeah, and that
like
range to help like cool off the RSI, kind of give us
yeah,
more
exactly.
momentum
Things
to
will like reset
pop up again.
and but if it chops here, then like it's gonna be a little tricky to trade because like there's no direction.
Yeah.
And but in terms of like but for us, like we basically have our indicator.
Hmm.
All we can still see like basically long term, like how the trend is. See like it printed bull at the bottom and it's just been an uptrend
Yeah.
ever
And we
since.
have a lot of room between the current spot price and the strength band there, that green.
Oh yeah.
So even if we do
Yeah.
get a pretty substantial pullback, that doesn't
Hmm.
invalidate the bull trend until we flip that band, it turns red, we push below it, and that band needs to become our resistance level before I would say the market trend on the weekly here has actually reversed. So
Yeah, like you
yeah.
can see here, like basically we fell through it, and we got a bear print, and then we kept like getting rejected at the band. See, like
Yeah.
here,
Oh, there's a very
right
clean
there.
like wick. This wick goes like right up to the band the second.
Yeah, and you can see like on a bull trend, see like in the past, you can see this was like in 2020, 2021, before the bear market. You can see how we've had multiple pullbacks. But it tends to bounce. The band acts kind of as support,
Yeah.
so it's a good sign when it
Exactly.
bounces in the band. So we could, I mean, there's still a lot of room, but even if we don't like retest the band completely, and if we maybe retest this support or whatever,
Yeah.
it could just cool off the starch or whatever. It should just cool off the market a little bit, and
Hmm.
then bounce and then push through to new highs. That could still happen. You know what I mean? So
Yeah.
so until we get a bear print with the red band, I think this we're still in a bull market.
I do
I mean,
too.
I know a lot of people are still in denial. They're still arguing whether we're in a bull market or not. But like, if you look at the chart and if you look at an indicator, it basically called the bottom. Like,
Yeah.
until this flips to bear, I think it's safe to, at least we think it's, we that it's going to be a bull market.
Yeah. And
So like,
we trade mostly we'll trade the indicator because like there's a lot of ways to like read this chart information, and so our goal at Maxi specifically with the Trading Buddy indicator is to kind of condense all of that into really easy like overview kind of a look where like looking at this chart right now without knowing anything about TA or
yeah,
anything about anything
like
I
if
can
you
I,
had nothing, right? Like if
yeah.
you just had the chart and you had the indicator, like look at this, like it would be so easy to trade this. Like this was the COVID crash. It just printed bull like exactly the bottom. And if you just held, if you're an investor,
Hmm.
like a long-term investor, you didn't have time to trade or whatever. You just hold on to it, like whatever you're invested in until like it flips bear. And similarly, right now, like we got a bull print, bull signal this year with a bull print and a green band, and then it's just been, we've just been going up. So pull any sort of short term pullbacks, which can like even last a few months maybe, but as long as we're still on bull, like it doesn't matter. You can like,
So
if you're a
we'll
long term
still
investor, just buy the dip. You know.
exactly. And that's a big part. Actually, buy the dip is an interesting thing because for a long time, buy the dip has been like a big rally cry in investing and trading. It makes a big appearance in the crypto markets as well. But for a long time, like when you see like when we had that bear flip, for example, in the chart we're looking at here, and the market started trending down, buying the dip isn't a very good strategy here because
Yeah.
so once we got that flip on the weekly and now we're back in this bear trend, I would now say that buying the dip is a viable strategy once again.
Yeah, it only works in a bull market.
Exactly.
And because like in a bear market, like you said, people would have bought here but each retest is just, it's just a bear trap. Like you can see how it keeps retesting the band and then it keeps getting rejected.
Yeah.
And then you'd have bought here, you'd have been wrecked. You'd have bought here, you'd have still been wrecked. And finally, people would, like how psychology works is that you get hit a few times, then you probably panic sell right at the bottom. You know what I mean?
Yeah.
And so like averaging down in a bear market and buying the dip is probably not the best strategy. But in a bull market, of course.
Yeah.
So like this like helps you see on higher time frames whether we're actually in a bull market or bear market, and then you can play your moves like, you know,
Yeah.
you can be smart with your moves.
And for the last few months, I have been like saying to a few people, like, I think buying the dip, it's becoming viable again. Like, while, you know, it's a very memeable strategy, you know, buy the dip, but
right.
it's also like there's a reason for that. Like, it's not a bad idea if the market conditions are correct. And like our trading buddy really helps us to kind of see the longer term market condition, so we can kind of get a sense of when these strategies do or don't become more viable, you know. And
yeah, absolutely.
I'm definitely excited. So I think for next week, what I'm expecting, because next week is the FOMC. If we get everything that like is already kind of expected, like if we get our 2.5% interest hike, I still expect, you know, chop. I do expect a reaction. I know that, you know, things are priced in, but there's a difference between anticipation of something and the reality confirmation of something, and then the price action that follows that. So again, what I'm looking to do is probably Monday, you know, looking to exit a few of my equity positions again, kind of like pull into cash and wait on the sidelines to see what happens with the FOMC, watch the market kind of react to it, and then take a look at, you know, are we, you know, picking a direction? Are we getting more clarity again? And then, you know, obviously the TA comes into play a little bit more. We'll do a little bit more in-depth analysis of some of the assets that we're trading, and you know, kind of note where we think is a good spot to enter and or exit or take profit. But ultimately, I think what I'm looking to do next week is probably Monday. Let's see how Monday we could see a little bit of a like climb again, but I want to exit before FOMC meeting happens and just kind of wait and let the market tell me what to do next versus me trying to guess what is going to happen next. Because again, as an investor, I'm not like reacting to, I'm not like trying to like guess something. I'm doing what the market tells me to do, and the market is telling me, you know, recently it's like, okay, buying the dip is a viable strategy again, but now we also know FOMC meeting coming up, you know, these real world events that do tend to influence market movements. And like the chart you have pulled up right now, the US dollar gaining in strength again here, bouncing off the bottom of our channel and starting to kind of like flip the momentum also on the relative strength index. So it's like giving us a nice couple of like indicators that there is a reason to step out, wait for clarity, and re-enter later. And
exactly, I think that's a smart thing to do.
Yeah, and there's nothing wrong with taking a cautious approach and hedging your positions versus taking a more aggressive approach. And sure, like there's success stories, you know, like you could go on Wall Street Bets and look at like gains porn and see people turning like $1,000 into $1 million, and that does happen. But the way that those things happen, I find it hard to call that a strategy. Like it's not something you
because
can
like
reproduce.
a lot of it is just people like gambling.
Yeah,
it's not really like trading. You know, they'll, because someone has told them about like, oh, let's, you know, buy a bunch of options.
Yeah,
You know, like, and they're like whatever 100x their like, you know, their capital, like, but they haven't understood what they're doing. That's not a strategy, and they probably wouldn't be able to like do this again if they try it with something else. They're probably going to lose money.
yeah.
It just happened to be that like, you know, maybe luck was on their side or whatever. You know what I mean?
And luck isn't a strategy.
Yeah, luck isn't a strategy. Like that's a casino. You know what I mean? Like go gamble if you want. And
it's just not a bad place to gamble either. So, you know.
Yeah, but what we're trying to do is like be traders, and what we're trying to like teach our, you know, the members too is like how to trade so that you're consistent. and your profits are consistent.
Exactly.
So
if you're making your money that you used to pay your rent or you used to like cover your expenses from trading, the consistency is key.
Yeah, like me and Max, we do that. Me and Max, we do that. A lot of it. Like,
I need to pay rent every month, and if I can't consistently make my rent money, like, and that comes, I don't decide if the market's going to keep climbing. I'd love it to keep climbing, but I need to be able to trade the market in a way that I can continue to make my consistent income, and that is only achievable through strategy, and strategy that is refined to produce consistent results. And so
exactly with basically know when it's bull and bear, when risk management, that's key. And so like looking at the chart, it seems like the dollar might be bouncing, so like equities probably going to go down, pull back. We're at like the SPY and QQQ is at like big time resistance. And if we look at crypto, let's look at crypto for a bit. Like I'm going to take off some of the lines just it's cleaner. So it seems like this is Bitcoin here. This is the weekly chart. The weekly just closed. That's not too great. And this seems kind of like a potential double top.
It could be. We're in this rising wedge channel still. We could keep chopping around too, but
and there's this like trend line which we've been bouncing on since like the start of the uptrend. And so we'll have to track and see when we get a pullback whether it's gonna like bounce on this trend line or not. Like if it loses this big trend line, then we're definitely gonna like pull back way more, like probably retest. Like I see like support around here, right? Like if you lose this, and then there's some support here, but like if you lose this region, then we're definitely gonna like, then the next one is actually where the strength band of the Trading Buddy is. And this, if it loses, then like it's gonna fall like there's it's gonna probably like flip red, and then we're gonna like, I don't know, 20k, 18k around there. Like it needs to bounce around here to make a higher low or a double bottom, which is like an equal low before we then form a base. So I mean, so it looks like we're in this like rising wedge, which is not bullish. It's actually kind of bearish, like this rising wedge with like volume going down. That's kind of bearish.
A little divergence there.
So,
and we just saw the DXY gaining strength, and like we're saying that is generally going to move in inverse with equities. And like I said, I consider cryptocurrencies as part of that equities umbrella, because especially because in the last few weeks here we got some more clarity on how do we classify cryptocurrencies. So anyone who's
so what's the update on that with the whole XRP?
So anyone who's been following like the crypto markets, maybe not even that closely, anyone who's been following the crypto markets like tentatively, just like as a hobbyist possibly even, you would have probably been aware that there's a lot of like fear in the markets at the moment that is rooted in the SEC, the Security and Exchange Commission's assessment or assertment rather, that they have basically stated that it's likely that any crypto assets sold on exchanges in the United States that aren't Ethereum or Bitcoin constitute unregistered securities, and that trading those assets on these brokerage sites could be considered as unregulated securities trading, and therefore a form of securities fraud. And that these big institutions are committing ongoingly committing securities trading issues. So in the last few weeks, we got some clarity on this topic, because clarity has really been the thing missing here in the crypto market when it comes to defining our asset class, defining our, how do we categorize this? Is it a security? Is it an equity? Is it property? And we've all been asking these questions in the crypto space for literally years, and the legislation authorities behind making those things clear have really been dragging their feet. on like giving us that clarity. It really has affected the ability of cryptocurrency centric businesses to operate within the United States, because how are you going to do that if you're potentially committing securities fraud? And how do you even know if you're committing securities fraud if there is no clear definition of what is and what is not a security? And so this last week, there has been about a 2-year-old lawsuit against the Ripple Foundation for the token is XRP. And they have alleged that Ripple, the foundation, is committing securities fraud by selling XRP tokens, to institutional investors and to retail investors through these cryptocurrency brokers, such as like Coinbase or the like. And so this last week, a judge in New York finally released a ruling on this suit, and that ruling, in effect, says that no cryptocurrency assets, specifically XRP, but by extension other crypto assets as well, that are traded on public exchanges for retail investors, and that's you and me trading on Coinbase or on Gemini or like Kraken, like these exchanges where we can make an account, link our bank account, and buy these crypto assets. What the SEC has said is those trading, that format of trading, is not constitute security trading, and therefore is not unregistered security, and therefore is not a security fraud issue. However,
that's really cool.
That's huge news. Like very nice clarity for the crypto market, and that's that's really good news for crypto tokens that aren't necessarily XRP, because it means like, oh, all these other coins, like you have a bunch of different crypto assets at this point, out in circulation, like thousands, maybe even millions, who knows. But it's saying that by default, just on the merit of them being crypto assets and being traded and offered to the public through these exchanges, that does not define them or default them into being securities. And therefore the SEC doesn't actually have jurisdiction over that. And so all this like stuff they've been doing, they can back off with, because it's not their jurisdiction. And that's really, really positive. But at the same time, the ruling also said that the Ripple Foundation's actions of selling XRP tokens on an institutional level did in fact constitute an unregistered security sale. And so there is still very much weight and merit to the lawsuit that is still ongoing. Obviously, this is a ruling within a bigger suit. And, Ripple is still on the hook for, committing, and now it's been effectively confirmed they have committed securities fraud by trading and offering these assets to institutional players. But it really is a nice step forward in giving us clarity as retail traders here in these crypto markets that no, not all these tokens are securities. And that's great. That's like, it's not the clarity we need to like move the markets forward long term. And I mean, you can see it right now in the Bitcoin chart. We did get like a little bit of a big candle up there, but immediately kind of sold off again back, kind of came down to earth as the markets, realized, this isn't like the end all be all statement. This is also, again, it's one ruling in this ongoing case. Very likely that the SEC is going to appeal the ruling as well. Look for a higher court can still overturn this, but it is definitely a win for retail investors, for anybody who's been trading crypto tokens that aren't just Bitcoin or Ethereum. Is now basically kind of been confirmed, at least by one of the judges at a lower level court in the United States, that has set legal precedent saying not everything traded on these exchanges is defaulting into the securities category, which that's on its own is a huge development and very, very positive news. But also, kind of metered. This market is more mature these days. It's not enough to get like an announcement like this, like 5 years ago would have seen like 100% bump in the crypto price. Whereas today we saw like a 5.
But yeah, exactly. And also we're still in a bear market, I think. Even though we're having sort of, if it follows the same cycle, like the next bull market should start right around the next Bitcoin halving, which is scheduled to happen next year.
Yeah, around April.
Around April. And so what we're saying is like, at least like going back to the chart, we might, we just trade the chart. right? Like we don't care, like
Yeah.
you know, like whether it's
I'm
you know,
positive that we can find bad
like,
news on a red day and good news on a green day. So
that's right,
yeah,
exactly. So like you know, so we don't really, as traders, we don't like trade the news, we trade
yeah,
the chart. And looking at the chart, yeah, the DXY might bounce, like, so we might have a pullback. What's important to see is like when we do have a pullback, whether Bitcoin
yeah.
is going to stay within in this
Where
pennant, in this
is
trend line.
where do we find support? And
Where
this
do we
is
find support? Exactly.
yeah,
And if we lose this, then we're going to go even further down.
hmm
And you know, so like all we're doing is like, you know, just playing the short term like trend, and then until the actual bull market starts. It's very easy to see for us when to see the actual bull market when it starts, because all
yeah,
we need to do is like change the Bitcoin chart to the monthly chart,
yeah,
and you can see all we have to do is like just wait for a bull
yeah,
signal on the monthly. I mean, you know, and then it's like any dip that we get is just, again, it's going back to what we said. You just keep buying the dip.
yeah,
Once
exactly.
it's a bull trend on the monthly, just keep buying the dip until it flips
great.
there, and then you know, so like you can see it's worked like every time. So that's what we're really waiting for.
Yeah,
To,
and the monthly chart really shows how this rising wedge is basically the price
yeah.
retesting the strength band very, very
Exactly.
clearly. Yeah,
We can see it. So like, you know, it might lose it now, or we can grind up some more and then lose it. Or we break up. Like that'll be like
it could flip,
really
and then we get
like,
the bull. Yeah, the
yeah,
bull could be early,
then,
but I want
but
confirmation.
until then, yeah, exactly. So until then, we're just playing these like sort of like short term retests and dumps. Like that's what we're doing. We're just like playing like, you know, the weekly like ups and downs that's what we're doing.
Yeah, and we have gotten a flip on the weekly here into bull, and that does kind of give me a little bit more of a like maybe buy the dip is like coming back onto the menu. But just like Sid said, with crypto specifically, it's a much less mature market than, you know, equities, like, you know, than like the stock market for damn sure, and so it is also really a good practice to like zoom out, take a look at the general trend long term. So the monthly chart is definitely going to be like a great indication for us to basically, you know, buy the dip on the menu. And of course, when we do get that first bull print on the monthly, I'll start like buying the dip, and then once we start hitting that trend line, you know, the green, which will then be green, bull, the strength band there, that's where I would then, you know, on top of buying the dip, maybe like actually open some longer term positions that are intended to ride out the entire bull market cycle, or at least, you know, intended to be sold near the top of the bull market. Fingers crossed.
So we'll have to see like next week how the FOMC goes, how the markets react.
Yeah.
And the DXY.
Yeah. So moving into next week, I think we're gonna keep an eye on the squeeze. I think the squeeze is absolutely still in play here. That's CVNA.
Carvana.
That one is, we're not necessarily like emptying those bags as part of the scale back during the FOMC week here, depending, of course, on the market trend continuing the way it has been. You know, the picture is developing in real time, so we need to like adjust our strategies as this picture develops.
We did take some profit though, because like we did see like, you know, for example, like this was the last daily high, so it just made sense to take a little bit profit out there, and it did sort of get rejected and have a pullback.
Yeah,
but I don't think the bull move is done yet. I think it's just like cooling off. That's what it's doing.
We got a few people in the chat too who have like limit orders, I think around $40, a couple like looking to like buy.
Yeah, around here, which seems like a good spot, because there's a gap here. If it might pull back to around here.
Yeah, so we'll definitely still keeping that in play for next week. But then the big thing to like watch for is going to be the FOMC meeting. See what does Jerome Powell let us know what's going to happen with the interest rates on a federal level, and then keeping an eye also on the DXY chart. How is the dollar? Is the dollar continuing to gain strength? If so, that is indicative of a dollar being a great safe haven for storing wealth, and that being the main strategy of hedge funds. Kind of indicates then that we're going to see a shift out of equities and possibly like a little bit of a downward pressure on that to let it cool off again. Absolutely not saying that the market's flipping straight back into bear, but definitely that the market is going to be flipping or trying to cool off here on the tail end of a multiple week run up here, and that is going to be
might just chop around.
Exactly. So it could cool off. So we're looking for that, and then again. Crypto did get some really good news for us. We got a nice clarity here, or more clarity than we've had in the history of this market existing on what these assets are as far as how to categorize them, which governing body has jurisdiction over making rules on them. So that picture is becoming more clear. That's positive. But again, the crypto market still, it looks like we want to kind of calm down a bit, sell off a little, and so we are also metering our expectations for this rise to continue. But ultimately, I think the big takeaway for next week is let's pull out, wait, see what the picture is, and make decisions informed by the actual progression of the market versus by our speculative opinions. And in general, that has been part of our strategy all since we've been trading stocks, honestly. Whenever there's an FOMC meeting, and honestly during the last few months or even the last year or so of insane inflation ratings and all this stuff happening, we've also been kind of pulling back a bit on our equity positions during the CPI report drops, because the CPI reports basically show the metrics for what inflation currently is, and then the FOMC report or meeting is how are we going to act on that information. So both of those are kind of events that are worth keeping on your calendars, and maybe especially if you're an active trader, maybe becoming a little less active during those weeks so that you can get the clarity that those events bring to the market. But it'll be exciting. We'll be paying attention closely. We'll definitely be back in Discord early in the morning on Monday here to see how markets open, see what's going on, and I don't know. I'm excited because this last week has been a lot of fun. But it's a lot more fun when the markets turn bull too. It's a lot easier to trade long than it is to trade short. Yeah, we've
had some really insane gains.
Yeah. But it's also I personally it's easier to sleep at night with spot long positions than it is with leveraged short positions, because you're not worried about a margin. You're not worried about flash market moves that liquidate your position. That's just it's not a risk that exists on spot trades, and it's much easier to participate on the upside. So buying the dip has kind of started to come a little bit back on the menu in the stock market, and we're keeping our eye on the trend as it progresses, and hopefully getting that kind of menu item back over in the crypto market soon as well. But yeah, until then, let's keep an eye on this, and hopefully, you guys also having good luck trading out there. If you would like to join these communities, of course, and have a little bit more of a, hands-on, say in these conversations that we're having in the Discord, jump on over to maxi.io. And if you sign up for a membership right now, we have the first month is free. You could try it out. If you don't like it, no harm, no foul. But you'll get access to the trading indicator as well as the private community, and you can join the conversation and see if it's something that maybe is worth your time, or your is worth helping you kind of make decisions. And at the end of the day, I personally have really been enjoying it. And even though I trade on my own all the time too, having a group of people around to bounce an idea off of, or being hey, I'm looking at this ticker, and just getting a sentiment immediately, it's just very valuable and really fun. So we'd love to see you there. So come join up and try it out and see how it works for you. Join some of our happy members here and take some of these gains home with you as well.